Hello everyone and welcome back to Option Alpha. Tonight's video we're going to talk about how to trade options in any market. Now again, this is one of the great things about options trading as compared to other types of trading out there is that you can really trade options in any market and still make money. And I'm talking bull markets, bear markets, neutral or flat markets. There's always a strategy out there that you can use for options trading to make money. So first, let's talk about how to make money in a bullish market. Now these are markets that you think the security or the stock is going higher in, and you want to start making money in those types of markets. So let's just take a general example of a stock here, and this again is a stock that we just kind of took a chart out here, and no date, no time, no ticker symbol. But let's say that you see this stock and you think it might be bouncing off of its 200-day moving average here right at around 100. So if you wanted to take advantage of a bullish move in this stock, then you could do one of two things. You could obviously buy call option outright, but we know how dangerous call option buying can be, right? You have to have a dramatic move in this security in a short period of time in the right direction for you to make money. Or you can use what we like to do in this situation is to do one of two things. We can either sell a naked put below the market. So for example, we could sell a naked put at a 95 strike price, and so long as this particular stock here trades above 95, we make all of our money. So it could even trade all the way down to 96, and you could be completely wrong on your bullish bias, and you could still make money. The other way that we could trade this as far as a bullish play is to trade a credit spread down here below the market as well. Now this would have a little bit more of the limited risk feature that you want, but your profit potential would already be reduced a little bit as well. So we could, for example, trade a 95-94 credit spread below the market. Now again, this is an example of what to do if you are bullish on the markets. Now let's say that you're actually bearish on the markets instead of bullish, and what we're going to do is use the exact same strategies we would use if we were bullish on the market, just in the complete opposite. So again, let's take a look at the chart that we have up. And here's the same chart that we have. So let's say that instead of you thinking that the security is going to bounce off of this 100 price level and its 200-day moving average, you actually think that the security is going to continue lower and actually head down into the upper 90s. So instead of actually selling a put below the market, you could actually sell a call option above the market. And let's say you sold a call option with the strike price at 106. So as long as the security trades below 106, you could make all of your money on that option premium. It could drop all the way down to 95. It could even rally up to 106 and you would still make all of your money. Now again, we could also trade a credit spread above the market, and in this case we would trade a 106, 107 credit spread, and that would create a limited risk strategy for us, for those who are a little bit more conservative in their trading. But again, either way you look at it, you can make money so long as the security trades below that level. Now let's take a look at some neutral trading strategies. Now again, neutral markets are flat markets that really don't have much movement. Now a lot of people actually characterize neutral markets as markets that trade sideways but actually have some movement. So you could have a pretty volatile market that has big swings every day or every week, but as long as it's trading in a tight range, that to us is considered a neutral or flat trading market. It's not trending in any direction. So again, let's go back to our stock chart that we're looking at. Alright, so we've kind of covered all the basics on bullish and bearish trades. Now what if you think the security is going to trade in this sideways trend for the next month or so? And you can see, going back a couple months, you can see that it's been trading in this sideways or contained area, kind of around right around 99 and with a top range around 105. So instead of trading a directional play on the market, we want to take advantage of this low volatility. And this is where options trading comes into play as far as being a great income source in flat markets. So what we would do here at Option Alpha is trade an iron condor. And basically what that is a combination of a credit spread below the market and a combination of a credit spread above the market. So we basically bracket the market in here, and so long as the market trades in between that range that we've identified, we make all of our money. So again, this is a different way that you can make money in flat markets or neutral markets. If you were just to trade the stock, you might not make any money on this trade over the next month or so. As always, hopefully this has been helpful, and happy trading.